Hey everybody, Steve here. Thank you so much for listening in. Thanks for coming out. Those that braved the Texas change in weather, which was 85 degrees yesterday down to 40 degrees today. Kind of crazy. Tonight we're going to talk about the year 2025 in review. I'm going to probably talk to only about 12 to 15 minutes, and then we'll take questions from there. But I do owe you what happened this year and more of a projection as to what's going on going into next year. So this is a standard disclaimer. If you want to take a look at that, if you're catching this on replay, go ahead and pause and read that through. But for the people that are here, these are my opinions that are what happened in the facts as I interpret them in 2025 as to why, and then what's going to happen as we enter 2026 here in a few days. Okay, there's the chart of the year. You can see three different lines on there. You've got the top line is the NASDAQ, the QQQ, the middle line is the S&P 500, and the blue line is the Dow. That's generally the order you will see them at the end of the year. If it's a positive year. If it's a negative year, that's kind of flipped, right? The Qs are more volatile. They're a higher vol asset, so they would be lower in a down year like 2022. But that's where we are. When you look at the raw numbers, Dow Jones up around 14%, S&P up about 17%, and Invesco QQQs, the NASDAQ's up about 22%. So really, where's the money been at? Big tech, Mag 7. That's where it's been at for a number of years. Get a resounding cheers here in the room for that. If you look at our top 10 holdings, that's going to encompass most of the Mag 7 right there. It won't always be that way, but there's really no reason to leave right now. And people keep asking, it's like, hey, do we need to take profits and rotate out? And I'm like, only if you don't like money, because these are the companies that are changing the world. They're also starting to get very big. They all are wearing T's now, right? Not T-shirts, but T as in T-rillions. And, they're so big, it's just like, can they continue to do that? And I will say, yes, they can. Allie and I are going out to the Consumer Electronics Show next week in Vegas, and we're going to see the latest technology that's out there, and I expect to be just as amazed as I was last year. So we'll probably even more bolster our confidence in the fact that tech is where it is to be. So a volatile start and a strong finish. So let's talk about what happened. Go back to this time 2024. We had just elected Trump. There was a sugar high going on in the market, so the market was going much higher. That continued on into January and February timeframe. Then we had the inauguration, sugar high through the inauguration. And then what does Trump do? He talks about something he didn't talk about at all when he was running, and that's tariffs. So he had talked about this during his first term, but it really wasn't what people elected him for. So the market did not like it when he was doing his tariff tantrum, if you will. And we'll talk more about some of the details there. But basically, he started throwing those around. Market did not like it at all. Sold off actually pretty hard. Was it concerning? Well, it started to get concerning because people were worried about inflation skyrocketing, that tariffs are inflationary, proved that they're not, at least this year so far. And then the snapback from that was just about the same. If you look at the V shape, it's pretty symmetric, if you will. So there was a snapback kind of equal to the sell-off, and then the market went higher from there. The only other tantrum we had was later in the year. In November, we had the AI bubble was starting to become the primary narrative on CNBC. OMG, AI is not all it's cracked up to be. I don't know. I'm asking Grok. Probably, 6 months ago, I wasn't even subscribing to Grok. Now I'm probably bouncing 20 to 30 things off of Grok a day, right? It's kind of like, has your back. It's like, I'm pretty sure this is the rule. Let's look it up. It's like, can you give me the exact source of what I already know to be true, but how can I source it exactly? I don't know. It's here to stay. You do not have to worry about it. But we had a little sell-off there, and we haven't really recovered. We kind of chopped our way through the end of the year. So those are kind of the numbers for the year. Let's talk about some other things. Here's your tariffs. If you remember, we had Liberation Day. Anybody remember the day? Is it on here? It's April 2nd. Yeah, the day after April Fool's. That'd be a dumb day to have Liberation Day on April Fool's Day. So we had it the day after that. I remember hearing Liberation Day. I'm like, that's not the branding I would have used right there for these tariff things. Anyhow, you can see what the chart is the effective tariff rate. Now, we're all learning a little more how Trump operates. And He likes, he's business 101, to be honest, right? So he threw all these tariffs in place, scared the crap out of everybody, including the U.S. citizens, with every intention of backing them off, right? Like the substitute teacher that comes in and starts cracking knuckles, everybody snaps and pays attention, and then you back off, and then you kind of go from there. So you can kind of see that we were up towards the 25+% kind of crazy there for a while, and then kind of back down to that 15%. And you know what? Kind of so far so good. We don't really have inflation coming out of this. We're also not exactly getting those checks in the mail that we were supposed to get from all these inflation, the extra inflation money. I don't want that. I would prefer it go to the big debt that's out there that nobody's talking about. But those are exactly kind of what happened. Things kind of chilled out about a month after Liberation Day, May 13th. Was the day that the market had fully recovered from the sell-off that started at the beginning of March, if you will. Okay, April 9th, 2025. What happened that day? The market went up 11%. Yeah, I didn't build these slides. Corey on our staff here builds these slides for me. And he's like, hey, do you remember the day that the market went up 11% this year? And I was like, honestly, I don't. I literally don't remember it. I'm sure at the time that was huge. But yeah, when you get these periods of volatility, that's when the market can be whipping all over the place. There's going to be a point to this. It means stay invested through these things. Don't get emotional and don't get tricky with trying to play them. Because if you kind of flash back to COVID, which I remember very specifically, the market's moving up and down like 7% a day, which now that's concerning. But here, if you kind of look at the month of April, which is this chart here, it started off, it's up, although we're having bad days these days. Writing's pretty small, 3.5%, 4.9%. But it's always after the big sell-off day that you have the huge green day. Now, not every single time, it's not a tradable thing, but if you have the big sell-off, because what happens here, it's that point of capitulation. I jokingly say it in-house, but I know when certain folks call me, it's like we're at the market bottom because I've got my favorites that are calling and wanting to go to cash, right? It's just like, well, I hear you, and we're not going to do that. And that can be a conversation. It's like, you're paying me. I'd rather you fire me than you actually go to cash right now, right? Because this is not the time to go to cash. And sure enough, it comes back. So 11% in a day, that's kind of the point of the year in 2025 review. But to expand that out to a greater investing point of why you don't bebop in and out of the market is this chart here is showing you that if you stay invested all days for the past, I think it's 20 years. Yeah, 2003 through 2022. This is your return right off of $10,000. That's your base. That's what you would have. If you miss the top 10 best days, you would only have half that much. Subtract out the 20 best days, you have that much. And if you subtract out 30 days, the 30 best days in a 20-year period, you're actually barely up money, right? So that's why you are at great risk of missing these huge up days, even when it's the most painful, right? So know that going forward, there will be more pain in the markets. It's part of the investing process, yay, but it is what gets you those huge gains. So it's during the big volatile sell-offs that are out there. So stay engaged, if you will. Okay, this is the asset class performance, which I don't like this chart and I don't use it very often. And it's an eye chart. It's called the Skittles chart in the investing world. But what you have here are the different types of investments that are out there: REITs, small caps, emerging markets, high yield bonds, blah, blah, blah. Right? We don't really invest this way. We don't allocate this way. We use thesis and conviction. We have very specific reasons for owning something. We don't just own everything. But it does show you at the end of this year, emerging markets were the best asset class out there, followed by international. How much exposure do we have of those? Very little. Some, but very little. We're more interested in large cap tech, which was the third one down. The gray AA across there, that's your 60-40 type portfolio. We don't invest like that either. We like to focus and look for the alpha that's out there. But it kind of tells you that 60-40 is going to end you in the middle of the pack, even when the pack is down. So the 60-40 portfolio looks nice, but that's also minus 16% in 2022. So just bring that up is because this was a strange year in the fact that the emerging markets and international were leaders of the pack. I don't think that holds for 2026, and we're not going to allocate that way, even though we do have a percentage allocated to those, just not a big percentage. Okay, as far as sector performance, that's another thing you review at the end of the year. IT is where it's at. We've been overweight IT ever since we founded the firm in 2013, and it has been the place to be. So don't expect that to change anytime soon. Does it reset every now and then? Yes, and we saw that a little bit here in November, but IT snaps back, right? Google's not going anywhere. Amazon's not going anywhere. Apple, I think, will be around for a while. I'm even a believer in Tesla now, which just is hard to even say those words. But since I don't say them very often, when you think of Tesla and you think of the cars, whatever. Humanoids, they're all over it. And there's going to be some big government contracts, not only ours, but around the world for these humanoid armies. Yes, Steve's seen too many movies. No, it's coming. I will. It's coming. Who would not do that? We already have like robot dogs. We have people walking like robots around the room right now. I mean, it's coming. Why would you fight your wars with human beings if you could have these robot armies? So anyhow, contracts are coming. Tesla's going to be in on that. Communication services, industrials, those are all kind of up. But if you want the alpha, right, so you want to stay towards that tech. The AI boom, those are all your AI names. And that's going to continue at least until quantum computing hits. But that's a topic for another day. What else has screamed higher this year that's a little bit of a shock for folks? And that's precious metals. This is not a space we like to be in normally. But yes, silver and gold have ripped higher. Copper had its little fun in the day back earlier in the year when copper was the hottest thing going. It's like, oh my gosh, please no more texts or calls about copper. That certainly chilled out. That's the bottom one is copper down here. But when you look at silver, silver's up over 100% this year. Silver, right? And supposedly there's people saying there's a silver shortage. I don't know. Maybe they sell silver. I don't know if there's a silver shortage or not. But all I know is it's up, got close to $80 an ounce at Friday's close. Sold off a little bit today. But I was selling silver coins this weekend, right? So I'm moving some silver. But when I think of, what's the concern there, right? Why would people be racing to precious metals? If you are worried about inflation, you want assets. So, okay, what are assets? Real estate is an asset. Stocks are assets. And then precious metals are assets. Bitcoin's also an asset. It's a digital asset. And I tell people, I'm like, go into Bitcoin unless you don't understand Bitcoin or don't want that, then go into gold, right? So, however, Bitcoin has not done that well this year, but I will say the last time that the precious metals ran higher, when they faded, that was a big move up for Bitcoin. So it's kind of like go with what you know. With the market, real estate, and gold, it's like you can buy that stuff because you understand it, and they're all ripping higher, right? So why mess with the thing that's not ripping higher if you can things you understand? But if those start to sell off, I think we'll see a rotation into Bitcoin, or that's just my hopium. But I do think that is going to happen. Okay, the Federal Reserve drives markets. This is next to last slide. So when you think of interest rates and how they drive the market, I like to say there's like millions of forces on a market, which is this big entity. The biggest force by far is the Federal Reserve and what we're doing with interest rates or the price of money. When you had your economics class and people talked about weighted cost of capital and all that stuff, and you were like, oh my gosh, I just hope I can learn this enough to pass the test. Well, it's real. it moves the market for sure. So money is getting cheaper. So when you look at the 5-year inflation chart, let's look at the 5-year Fed chart at the bottom. So you're looking at the bottom chart now. We're clipping along. We had the ZIRP, the zero interest rate policy for a number of years. Honestly, life was pretty amazing, except for December of 2018. Life, which we sold off 19% for no reason, but we do have that every now and then. Literally, money's almost free, right? Everybody's locking in and refining into their 2.x, mortgages. It's like, okay, why would you do this, bank? Well, yeah, they gave it to us. I still have mine. Hopefully, you still have yours. But then we got to 2022. This was not the fastest interest rate raise in history. It was the second. 72 to 74 was the fastest ever. We went from 0 all the way up to 5% on the Fed rate, which is kind of crazy. And then we flatlined there and we took 3 steps down last year. The first one was 50 basis points and then 20, so a total of 1%. At the end of this year, we did 25, 25, 25. So that's kind of where we are. Here's the inflation. Got a little bit out of control coming out of COVID. I don't know, mailbox money. Don't want to get political, but I don't know. Is that a great idea? We'll see. Probably not. Kind of has settled down in since then. But what I will say is the interest rates settled in at around 3%. 2%, deflating your money at a 2% is where the government's trying to do. And that's not that great either, because you're just debasing the dollar significantly. But 3% even accelerates that. This year, historically, Federal Reserve Chairman Powell said at Jackson Hole, we're no longer necessarily holding ourselves to the 2% rate. I think that will go down in history just as Nixon going off the gold standard. Because if we aren't going to chase 2%, then we can just keep dropping rates, which is what we're doing, which that could cause inflation. So we shall see. But that's where we are with interest rates. They're coming down. We got a new Fed chair that's going to be appointed any day now that will take office May 15th of 2025 or 2026, excuse me. So that's coming. And, you know, Trump does Trump things. So Trump will probably, appoint somebody that is going to do his bidding, which is take interest rates down. That's good for the market, good for real estate, good for Bitcoin, good for assets, right? Is inflation going to happen? We shall have to wait and see. Okay, the year in review summary, despite the crash in April, things kind of chilled out after that, and we've had our third straight year of up markets. Obviously, it's kind of like red hitting 3 times in a row. At roulette, it means obviously we're going to have a down year come up. No, it's got nothing to do with that. Everything's looking pretty bright going into 2026. AI dominance, that was the theme of this year. I think it'll be the theme for next year. We're not quite done with figuring this AI thing out. I think it's going mainstream. Almost everybody I know under the age of 70 is now okay with going to an AI and asking questions. So it's here to stay. I don't see that changing. Safe haven assets, gold and silver had their year for sure. I think it'll be Bitcoin's year next year. We shall see. Volatility is normal. Just make sure that you stay strapped in. This is a game. If you understand that the volatility every now and then markets are going to whip all over the place, don't check your app for that day or tell me to say like, hey, I'm not checking my account. Let me know when I can look again. I'll be happy to do that service for you. So, all right, that's 2025 in review. That's your team here at Anchor Star Wealth. If you want to reach out and talk to an advisor, we do have our client appreciation event coming up on Wednesday. That's New Year's Eve day, if you will. So it's not a night event. It's during the game. Kickoffs at 2 for Texas versus Michigan. Doors open at 1:30. We'll grab some pizzas or something once we kind of figure out who's coming on out. But if you're available coming out, would love to see you. All right, that's what I have. Any questions in the crowd?
Yeah, Bitcoin ended down. What's up with that?
Okay, so the question is, what's going on with Bitcoin? Fair question. So everything you showed, Steve, everything's in the green. You didn't show the Bitcoin chart. And I'm like, yeah, I didn't, because I showed that last week. Walk of shame. So yeah, Bitcoin's likely going to end up down on the year. As much as we hype it, as much as we say it's the future, as much as everything coming out of my mouth is a tailwind for Bitcoin, I still believe all those things to be true. However, it has been a very volatile hold for sure. So why? Largely, it's because the banks in 2024, January, we had the big ETF release. A lot of money came screaming in. IBIT was the fastest growing ETF to 70 billion ever. It was kind of the rage. It kind of got in front of itself a little bit. And tends, when things start going straight up, you tend to think it will continue to go straight up to the moon forever, because the thesis still held. Well, there was part of that was it got out in front of itself. So there was some selling to consolidate. Part of it was Larry Fink started talking positively about Bitcoin. And if you're like an OG Bitcoiner, you're like a rogue person, you're anti-establishment. And the last thing you want to do is party with Larry Fink. So when Larry Fink's like, oh my God, that guy's showing up now, it must be time to sell. So people were rotating out of their Bitcoin that they had like a 50-cent cost basis on, and now are dumping it for 80, 90K. Okay, maybe it's time to take their profits. Good for them. I was too dumb and did not believe to buy in at that level or mine or anything like that, because I thought it was not going to be a thing. It is a thing. So that's part of it. And then secondly, when everything you understand is going up, why not just invest in that? So I do think, and I looked historically last time Gold and silver kind of spiked up when they sold off, which is what happens when things spike, is they tend to sell off afterwards. That money rotated, well, not directly, but Bitcoin went raging higher right after the precious metals sold off. So it's kind of like, okay, that game is played out. Money's like water. It's got to go somewhere, and shooting higher into Bitcoin. So we shall see. So I sure hope so. But good question. All right, what else do we have?
So is there any kind of black swan event that you might see in 2026?
Okay, question is black swan events in 2026. What could happen? Number one thing I say is the biggest threat to the market is Trump gets shot. Now, there's obviously 50% of the country, maybe more, that would cheer some event like that. Not outwardly, right? I mean, but yes, if you have a major event in the news, like Trump getting shot, that, or having a heart attack and just dying, didn't have to get shot, right? But he says he's in great health, so that's probably not just going to keel over. But yeah, that would be a black swan event. Obviously, from there, you anytime you hand the presidency, which is somebody that we elected, to any vice president, which is usually some character that was like important in some swing state, right? I mean, that's just politics. Like, oh, no, we didn't really want that person, right? Anyhow, that would obviously be a black swan event. Inflation going out of control is another one that, again, if you own assets, that's not so bad, but certainly it would get us off of right now, interest rates are headed down. And if inflation becomes a problem, then all of a sudden you have to raise interest rates to stop inflation, which definitely takes the keg from the party. Yeah, you don't want that. That would affect the markets. And the last one, I would say social unrest. And that's probably not a 2026 thing, other than we're starting to see more signs of it already. You can think Minnesota in general, and now, of course, the weekend news. If you caught any of the, we were dumb to invest in Bitcoin when you could open some learning centers or learning centers in Minnesota and take the government money. Anyhow, there's a racial component to that that's not great. Anyhow, there's stuff going on there. There's obviously stuff going on in San Francisco that's not great, forcing a lot of people to leave. And then there's, the socialist mayor in New York City is an interesting development, right? Most powerful city, arguably, in the U.S., and now has a socialist mayor. So there's some different things going on there that could lead to some longer term problems. So we've seen stuff like this before, where there's kind of social unrest. Occupy Wall Street was going to change the world, and some folks sat in Wall Street for a while, and they decided they have better things to do with their time. So who knows how it will all play out? But certainly, if you think of there's the K-shaped economy, there's the rich get richer philosophy, but especially with folks that, there's the haves, then there's the have-nots, and if there's enough have-nots, that's when you start getting into that social unrest. So that could cause an issue. Those are kind of the three black swan thing. But I don't really think any of those are going to happen, but there's certainly something that would be a game changer. And when I think black swan events, those are things where I may consider going a little bit or a lot to cash. So economics, structurally, I think everything's pretty sound. All right, what other questions do we have? All right, looks like we're out of questions on our end. Thank you so much for listening in. If you have questions about this stuff, reach out to however you consume this, and we will get you an answer. Thank you so much for listening in. You have a good one.